Hey guys, happy Tuesday. It's that Dividend guy coming at you with another Robinhood portfolio update. Hopefully, everybody made some money today in the market. Hopefully, everybody had a GGD, a great green day. We're going to look at the overall portfolio, the individual holdings, the watch list, and then my two favorite growth stocks. So, for today in the market, we are down about $10. For the week, we are down 388. For the month, we're down 651. 3 month mark, we're down at almost $1,600. For the year, we're down $803, and all time, we're down $40. So let's take a look at the individual holdings, starting with Realty Income, my favorite um, real estate stock. Pays monthly, 15 shares, $886 of market value. Average cost is $45.38. 4.35% of the portfolio is in Realty Income. We're up 205.80, up 30%. Then Altria, we have 149 shares, $5,700 of equity in the stock. Average cost is $43.61. About 28% of the portfolio is in Altria, down 716, down 11%. A good cost down average opportunity there with Altria stock. Next, we have Coca-Cola. We have 20 shares, $1,000 of market value. Average cost is $51.26. About 5% of the portfolio is in Coca-Cola, down 18.30, down 1.78%. Not worried about it at all. Quality dividend king there and a good cost down average opportunity. Next, FRT. This is the flaring deal for this set of months. We only have one share. Equity is $74.32. Average cost is $113.40. 0.36% of the portfolio is in FRT stock. We're down about $39, 34.46%. I would have to put my grand into this stock this month. It's just such a good opportunity. Phenomenal cost down average opportunity there with that stock. And I love that it's a dividend king. And I love the tenants and the way they structure their business. So for me, this one's a no-brainer. Next is Lowe's. We have a dividend king here with two shares, $355 market value. Average cost is $100.86. 1.74% of the portfolio is in Lowe's, up 153.28, up about 76% on Lowe's. This is the exact opposite of FRT. They took off after I bought them. So I'm a huge fan of Lowe's. I just am not a fan at these prices. Next, we have AT&T at $26.82. We have 126 shares, $3,300 of market value. Average cost is $29.68. 16.5% of the portfolio is in AT&T, down $360.31. We do have a dividend of $65.52. Coming in, that will be buying us more ExxonMobil. But right now, AT&T is a glaring deal. PBCT, Dividend Aristocrat, the newest stock out of the portfolio. I wanted something in the banking sector, but I didn't want something that was known for cutting its dividend, and I wanted something that had paid and increased even through the financial crisis of 2008, which they did. So they checked all the boxes for the portfolio, and I was happy to find them because I wanted something in the financial sector that was cheap enough that I could be dividend efficient quickly, but I didn't want to sacrifice the dividend growth. So 13 shares, $136.76 is our market value. Average cost is $10.80, so a good cost on average opportunity there. 0.67% of the portfolio is in PBCT. We're down 364, down about 2.6% on PBCT, but it's one of those that I can buy a bunch of. I could be dividend efficient within a month and a half, so I'm not worried about it. I used Altria's dividends to buy into this instead of AT&T due to the fact that AT&T buying the dividend wouldn't help me increase my dividends for this set of months. Next, we have AbbVie, 60 shares, $5,000 of market value. Average cost is $72.22. About 25% of the portfolio is in AbbVie. We are down today, but up overall 723.45, up about 17% on AbbVie, and a nice dividend coming in of 70.80, which will be put into ExxonMobil stock. Next, we have J&J, Quality Dividend King. We have two shares, about $300 of market value. Average cost is $135.79. 1.42% of the portfolio is in J&J, and we're up $17.56, up 6.47%. Then we have 3M. We have two shares, $340 of market value. Average cost is $147.28. 1.67% of the portfolio is in 3M, up 46.01, up 15.6% on two shares. Then we have ExxonMobil. They are the biggest deal in the portfolio right now. 84 shares, $2,800 of market value. Average cost is $53.20. 13.8% of the portfolio is in ExxonMobil, down 1639.11, down 36.68%. Not super worried about it. They have stressed that they are keeping the dividend, and they're very passionate about increasing the dividend still. So I'm not worried about that, but I am excited to cost ton average in this quality company. Next, we have Walgreens, 6 shares, $225.12. Their market value. Average cost is $39.92. 1.1% of the portfolio is in Walgreens, down 14.37, down 6%. This is one of those that I sold Disney and I bought into this, so I'm not worried about. It. I can easily buy 6 shares. I put $1,000 in the market, so if this is a glaring opportunity, say Exxon goes back up to like 70 or above my cost basis, I would happily buy Walgreens. Next is Aflac, my insurance play, my financial play. 1 share, $36.91 on market value. Average cost is $35.75. 0.18% of the portfolio is in Aflac, up $1.16, up 3.24%. This is my goal stock, but as you guys can tell, I'm okay with shifting it because it doesn't make any sense to buy Aflac when it pays 28 cents per share when I have a glaring deal at 33, so it's cheaper. So keep this in mind. ExxonMobil is now cheaper than Aflac, right? But it pays twice as much of a dividend. So it doesn't make sense to buy Aflac at 28 cents a share for 37 bucks when I have ExxonMobil at 34 paying me 87 cents. So ExxonMobil has to be the gold stock because it's such a good deal. As long as they pay the dividend, I have no problem keeping the money in there or adding more to it. So I know I said Coca-Cola, AT&T, and Aflac are my gold stocks, and they are, but I'm not gonna hesitate when I see FRT is down half of its value, or ExxonMobil is a better deal than Aflac. I want to buy certain companies, but I'm not like strictly buying those. If there's a better deal in the market, I have to take advantage of that. So anyways, guys, next on to the watch list. I switched U.S. Bank out for Cisco because Cisco fits the portfolio's goals better. It has a better dividend growth rate. It has a longer streak. So Cisco at $64 is definitely a buy for me, about $20 of upside in the stock. PepsiCo at $139, I'm not touching it. Kimberly-Clark at $148, I'm not touching it, only $12 of upside there. Northwestern Natural, about $30 of upside, definitely buying it there. Colgate at $79, not touching it. Procter & Gamble at $142, not touching it. SX below 200 is just like AT&T for me right now, a definite steal. And this helps with the real estate portion of the portfolio. Next, ADM. They are a dividend king and a decently cheap one for that as well. And I don't mean cheap as in it's cheap right now. I mean compared to something like what we just saw in SX or Procter & Gamble. At these prices, I wouldn't touch ADM. But if I had to pick between Procter & Gamble or them, they're a better value because I can buy more shares because it's a cheaper stock. Next, Black Hills at 57 is a steal. Its 52-week high is 87, so about $30 of upside. So if I had to pick between ADM or Black Hills, I would choose Black Hills. Mickey D's at 227, not enough upside. And then, of course, the growth stocks, Apple at 117. I'm buying it. This is one of those that I'd probably buy at any price just because I want Apple in the portfolio. Same with Disney. If I can get it at a deal, I will. I'll pull the trigger. But I don't necessarily need a deal for either one of these. They're growth stocks. So I have a lot of confidence that they will grow in the future. And any dip, I feel like is a buy. So 125 for me is a deal. It's got about almost $30 of upside in the stock. And Apple at 117 has about $20 up in the stock as well. So both of them are definite buys for me. And I will be ecstatic when I can have, I hope to use my dividend income to buy something like an Apple or a Disney, which is kind of crazy because next month I get about $140 of dividend income, which will be put into ExxonMobil because it's a glaring deal. I might split it between Exxon and Black Hills simply because I want both in the portfolio. And I might be able to get 2 shares of Exxon and 1 share of Black Hills. We'll see, though. But anyways, guys, that wraps up the portfolio. Thank you so much for watching. Remember to subscribe to my YouTube channel, That Dividend Guy. When you do, hit the bell notification so you don't miss any updates. I post Monday through Friday. I try to get the video out about 10 o'clock at night consistently. consistency is key for me. That's my goal. I want to get as many portfolio updates out as I can, and as many videos out as I can. So if you guys enjoy consistency, if you want to reward me for that grind and that discipline, hit the subscribe button. It really does mean a lot. But I'll see you guys in the next dividend investing video. Take care, guys.